Guys, hope you are doing well. In today's video I'm going to be showing you how to use the Fibonacci retracement tool. If you first draw it, it will probably look something like this. You can copy my settings or you can customize them to your own likings. I personally use these levels, so it's level 1, 0, 0.7, 0.62, 0.79 and 0.5. There are much more levels, but these are the most important levels and I'll explain why in a minute. Down here you can find some further customizable settings like background, price levels, etc. Now, why are these levels important? You can see that the 0.5 level divides the price range into two separate parts. The one below the 0.5 level is called the discounted area, and the area above is considered the premium area. And if you want to sell, you would only look for selling opportunities in the premium area because you want to sell high and buy back at a lower price. And if you were in a bullish scenario, you would only want to look for buying opportunities in the discounted area because you want to buy at a cheap price and sell at an expensive price. So as you can see, there are three more price levels, which are called the golden zone or OTE, which means optimal trade entry. We already talked about the premium and the discount zone. So in a bearish scenario, I would want price to return into the premium zone before taking short entries. Now, these levels have proven over time that price has the most probability of reversing from this zone. So if we would have a POI in this zone, I would prefer this one over, let's say, a one that is slightly below or slightly above. Of course, if you enter from here and you have a POI right above this one, of course you would have a much better risk-reward ratio if you would wait for price to come into the most extreme one. But then you will see that you won't get pulled into as many trades because, yeah, in some cases price will just come into the zone and continue without you involved. So I like to trade from POIs in the OTE range. Now I will show you some live examples on the charts. This was a trade I took on the 30th January. As you can see, we have this 4-hour order block right here with imbalance above. So I was looking to take long positions from this POI. If we drop down time frames, you can see that I applied exactly the same model I do every time. I waited for this sweep, then we had a market structure shift with a very impulsive move. As you can see here, we have imbalances right here. I then looked for POIs, and this is where the Fibonacci retracement comes in. I'll take the tool and draw it from the bottom of the move to the top, which is this high right here, not this one, but this. And then you can see that the order block, the 1-hour order block, aligns exactly with the 0.62 Fibonacci level, which is a good sign because that means that it is in the golden zone. We also have one right below here. You can see this is also an order block, and it even has a imbalance above, which got filled, but it has an imbalance above. So it would potentially be a valid POI, but as you can see, price came into this order block and didn't make it further to this other order block. So I took this trade, but I first dropped down to the 5-minute time frame, or I think it was the 1-minute time frame, to get some confirmation. And as you can see, price started respecting the bullish PD raise, then shifted market structure with a very impulsive move, and this was pretty much the sign for me to enter a position. I then took the Fibonacci retracement tool again and drew it from this low to this high, because this is my trading range. And as you can see, we have a unmitigated order block right here. I entered once price mitigated it and put my stop loss below this low and take profit at a recent high. Yeah, and that is pretty much how I use the Fibonacci retracement tool. This was a trade I took on gold. As you can see, we have this clear price range from this low to this high right here. And I was looking for buy opportunities, so I take the Fibonacci retracement tool and draw it from the bottom to the top and look for order blocks or fair value gaps in the discounted area, more specifically in the OTE range. And as you can see, we have this order block right here, which also aligns perfectly with the 0.7 Fibonacci level. I then drop to a lower time frame to find an entry opportunity. As you can see here, price failed to displace below this low and shifted structure to the upside. I will now wait for the range to complete and then do exactly the same I did before. Now I will take the Fibonacci tool and draw it from the bottom to the top, exactly the same, and look for a PD array in the discounted area. As you can see, we have an order block right here. And we also have one which is right here. Now, which order block would I trade from? It depends. You first have to wait for a lower time frame confirmation before taking the trade. If we get an impulsive shift to the upside after a mitigation of this order block, I would take a trade from this one. But if we don't get it and we break through it, then I would wait for price to mitigate this extreme POI. I'll now drop down to a lower time frame and wait for a shift. Yeah, as you can see, price again fails to displace below these lows and aggressively moves to the upside. I will now then take the Fibonacci retracement tool and again look for a PD array in the discounted zone, and as you can see we have one exactly here. I will enter once price hits this order block with my stop loss slightly below these lows and my take profit at external liquidity. And as easy as that, take profit hit. In this example we could have also put our take profit at this high, but the 7.37 to 1 risk reward was more than enough for me. I closed the position in profits, and yeah, that's all that matters. I can play it forward, and as you can see it consolidates for a while and then moves for the next liquidity. And there we would have second TP hit. So this was pretty much it. If you found the video helpful, please like and subscribe. And if you have any questions, feel free to ask me in the comments. Thank you for watching and see you in the next one.